Are you facing an unexpected financial emergency right now, but you are absolutely terrified to apply for a loan because you think your credit score is going to get in the way? Maybe you are retired or you are right on the verge of retirement and you are living on a fixed income, whether that is Social Security, a pension, or modest monthly withdrawals. And out of nowhere, life happens. The car needs a new transmission. The air conditioner breaks down in the middle of a heat wave. Or, heaven forbid, you have an unexpected medical bill that insurance won't fully cover. You need a small influx of cash, just a few $100s, to bridge the gap until your next check deposits. But you sit there, looking at your computer or your phone, and your stomach knots up. You think to yourself, my credit score isn't where it needs to be. If I apply for a traditional loan, they are going to pull my credit, drop my score even further, and then look me in the eye and say no. Listen to me. That fear is real, it is valid, but it does not have to paralyze you. Today, we are talking about an app-based lender called Possible Finance. They offer short-term installment loans up to $500. Now, you might be asking yourself, Susie, how on earth do I get approved by a company like this when the big banks won't even look at me? You want to know the secret to getting approved? You have to understand exactly how they judge you. Because guess what? They do not care about your FICO credit score. Let me repeat that, because I want it to sink in. Possible Finance does not run a FICO credit check when you apply. They do not care if your credit history is bruised, battered, or completely non-existent. So, what do they care about? They care about your true financial behavior. They care about your cash flow. They look at your bank account activity over the past 3 months to determine if you are a safe bet. They want to see how money comes in, how money goes out, and how you manage what is left over. If you want to get approved, you have to show them that you are responsible with the money you do have. But here is where so many people make a critical mistake that leads to an instant denial. They download the app, they link a random bank account, and they pray for the best. No, hope is not a financial plan. You need to be strategic. To get approved, your application relies on 4 major pillars. First, you must link the correct bank account. This must be the primary checking account where your regular monthly income lands. If you receive Social Security, it needs to be the account where the government deposits that check every single month. If you have a pension, it's where that pension lands. Possible Finance requires a history of consistent deposits, typically at least $750 a month, and they want to see at least 3 months of transaction history in that specific account. If you link a secondary account that you only use for pocket money, the algorithm is going to look at it, see no regular income, and deny you on the spot. Second, you have to clean up your account activity before you apply. Because they are scanning your transactions, they are looking at your financial habits. They are checking for 2 major red flags: overdrafts and non-sufficient funds fees, what we call NSF fees. If your account frequently dips into the negative, or if you have a habit of bouncing checks, the system flags you as a high-risk borrower. It tells them that you are already overextended and that adding another payment will push you over the edge. Before you hit apply, you need to ensure your account has a positive balance. You want to show them a steady cushion, even if it is a small one. Third, you have to look at your current debt load. If you are currently juggling 3 or 4 other payday loans or short-term cash advances from other apps, do you know what that says to a lender? It says you are caught in a debt trap. It says you are borrowing from Peter to pay Paul. Possible Finance will deny you if they see too many active, simultaneous loans with other lenders. They want to be a temporary bridge, not another weight sinking your financial ship. Fourth, you must master the timing of your application. Do not apply right after your account has been drained by all of your major monthly bills. Look ahead at your calendar. Apply when your balance is at its strongest point, right after your income deposit hits, and before the automated utility bills, insurance premiums, or rent payments fly out of the account. Now, let's talk about the actionable steps you need to take right now to secure this approval. Step 1. Open your online banking app today and look at your last 90 days of history. Are there any overdraft fees? If yes, wait until you have a clean window of time before applying. Ensure that the account is strictly in your legal name and matches the government-issued ID you will upload to the app. When you photograph your ID in the app, lay it completely flat, ensure all 4 corners are visible, and make sure there is no glare. A blurry ID photo is one of the most common reasons human reviewers reject an otherwise perfect application. Step 2. Stop any unnecessary spending for a week or two before applying. Do not drain your account to zero the day after you get paid. Keep a buffer. The algorithm calculates your average daily balance, and a higher average balance drastically increases your odds of approval. Step 3. Once you are approved and you receive the funds, which can happen in a matter of minutes via your debit card, you must handle the repayment beautifully. Possible Finance allows you to repay the loan in 4 installments. But here is the magnificent part. They report your on-time payments to the major credit bureaus. This means that by paying them back responsibly, you are actively rebuilding your FICO score so that the next time you need financial help, you might qualify for a traditional, lower-interest bank loan. And if life throws you another curveball and you realize you can't make a scheduled payment, do not panic and do not hide. The app allows you to defer and reschedule your payment up to 29 days out from the original due date with absolutely zero rescheduling fees. You have the power to navigate this emergency. Check your bank statement, build your account cushion, link your primary income account, and apply with total confidence. You can do this, and you can do it safely.